Hello, everybody. We'll get started with the webinar at this time. If you would, let's do a quick systems check before we get going. Just type OK in the chat box if you're seeing my screen all right and hearing me clearly. Hello, Alex. Good to see you. Just waiting for a few more responses. I want to make sure the majority of everyone is hearing OK. I've got a different audio setup, so let me know if it sounds muffled or not clear. Let me know. Okay, so we'll get going. Looks like we must be okay for everybody. If along the way you have any issues, let me know. Obviously, based on the screen here, we're covering cryptocurrencies today. A lot of potential, a lot of good movements going on, some fundamental news coming in that is encouraging for the market as well. We'll take a look at. And as we get going, just keep in mind, as always, all investments have risk. No one investment or one trade is guaranteed to bring you profits. And this is true for Forex trading, CFDs, spread betting, options trading. You can read the full risk disclosure statement on AvaTrade.com. Keep in mind what we cover is meant to be educational and not taken as financial advisement. But as we go over things, the idea is that you're going to build upon your trading strategy, or if you're brand new to things, start building your trading strategy based on real knowledge, based on information and ideas that can really help you gain control of what you're doing and understand completely how and why you're trading on something and in which direction, with kind of maybe a checklist of ideas that you're looking for before you take a move on something that justifies in your own mind why would I buy on this rather than sell, or vice versa. Okay, so along the way, we'll be looking at both technical and fundamental analysis. We could go into blockchain technology, ideas about what is crypto technology. The blockchain behind crypto technology is viewed as a very secure, decentralized technology. And we could go on and on, but a lot of industries are starting to use the blockchain technology for lots of purposes, like voting and issuing stock from private companies. Large banks are getting involved with creating their own digital currencies, and it's become really a mainstay now, this blockchain technology that's become more and more mainstream. And we're starting to see lots of retail outlets accepting payments in different forms of cryptocurrencies. They're putting in both the hardware and software to handle it. And it really looks like it's here to stay. And this whole recognition of that has really brought the crypto charts back to trending like the old days of the cryptos, where we've got lots of nice movements and huge potential profits to go after. So first thing we should do is probably go to the demo account here and take a look. And you certainly can be using your live accounts, but I'm taking a look first at the technical analysis a bit, and then we'll move on to some of the fundamental news to hopefully explain why the technical movements are occurring. So this was from yesterday. We were looking at gold, and boy, we had a session going yesterday. Here was the support level. It broke the first one. Here was the second support level. While we watched it plunge down, we talked about if it breaks the next support, it could continue to drop, and it did that while we were watching. It was a pretty exciting session, and a lot of traders took advantage, I think, of that movement. Now, predictably, gold has come back up to the resistance point here, the old support level, and it's kind of paused. But why am I pointing out gold? Well, the cryptocurrencies, Bitcoin in particular, has been mirroring the movement of gold. Believe it or not, as you know, in the past, cryptocurrencies were saw as highly volatile, and people were somewhat scared to invest in them. They've actually become somewhat of a safe haven from what's going on with all the trade wars in the different countries and the instability in the European Union and the UK. People have been buying into Bitcoin and some other coins as a safe haven, and as we're seeing gold go up, so was Bitcoin. As it was coming down, so was Bitcoin and maybe Ethereum as well. So it was very interesting. So we see what happened with gold yesterday. Let's take a look at what was going on with Bitcoin and some other cryptocurrencies. Let me find them. They're all grouped at the bottom now with their new names. Okay, Bitcoin USD. And we see it pulled back a little bit, but not much. This was yesterday here pulling down, and then today it's had some recovery back up. So it mirrored gold a bit, but not completely. And so as we look at the technical analysis right now, let's zoom in a bit and take a look, and we see a recent high ceiling up here. Okay, this huge bullish movement here with Bitcoin climbing above 9,500, and we see we're sitting right now about 9,351. And when we look at this, what do we see? We see high points basically getting lower, and we see low points basically getting higher. So the market is tightening. This is certainly a tightening market, and soon, what do you think will happen? One way or the other, right? What do you see potentially happening? A breakout. The market can only tighten so far. It's going to try and wiggle between here and eventually either break out up or break out down from this tightening. Okay, one or the other has to happen, right? Eventually here, it can't just keep tightening. And the market is tightening right there on Bitcoin. So the question is, which way do we think it'll break out? What makes sense? And so technical analysis wise, if it breaks above this high point right here, let me draw a line. If it breaks above this high point here, here's our resistance, the most recent resistance. Resistance here, about the same spot. And so if it breaks above this resistance level, then you could maybe have a pending buy stop ready to buy. That would mean, okay, uptrend started, higher high point, broken resistance. Okay, that's one option. If it breaks below the support down here, you could have a sell stop ready to go if it breaks below that level. Okay, so you could simply put a couple pending orders and wait for the breakthroughs out of this consolidation that's been occurring sideways. Yeah, Alex, you can try to make some money on this tight range, but remember you have to overcome the spread. Now we've tightened our spreads here. We're really competitive with our spreads at AvaTrade. Just this last Friday, we cut spreads across the board 20, 30%, even more on some assets. But as the tighter this gets, to try and play this up and down movement, it gets a little harder. So yeah, you should check out the spreads, Alex. And remember, we don't charge commissions in and out of trade. So we're better than most of the competition now. Now, if you combine no commissions with the tighter spreads, we're doing really well in that regard in terms of trading conditions. Now, but this is a tightening movement, so it might be hard to scalp when it's getting tighter and tighter, so it's hard to scalp that movement. But the breakthrough in either direction might be an easier move. But listen, by all means, if you want to scalp it, you certainly can. You can try and make that move. Small moves down from the upper slope and up from the lower slope. But the breakout moves look to me to have more potential for larger movement once you get outside of the range, either up or down. And so if you're buying in on a buy stop, this might be your first take profit location near this last high point. If you're selling on a sell stop, your take profit might be this last support area down here around this level. Okay, so two opportunities for pending orders. Type yes if you'd like me to show how to set up the pending orders. If it's something you like the idea of the breakout moves, buying, if it breaks through the resistance, selling, if it breaks through the support, I can walk through how to set up the pending orders if you're unsure. Real quick, I'll just show you. For those of you that are new, you can switch from market execution to pending. Okay, switch from market to pending just like that. And then again, I'll just show from market to pending order. And then if you want to buy from the higher point, that's up here. If it breaks through and you want to buy in, let's say at 94.33, you would do buy stop. Entry price, whatever you think is right for you, 94.30 or whatever it might be. And then you can program your take profit, your stop loss as well. So if you bought from this location, 94.30, your stop loss might be back down at 94.05, and your take profit might be up here just before the resistance. Okay, so if your buy-in is as it breaks through the resistance, might make sense to have your take profit just below your stop loss just below in case it goes back down, and you take profit somewhere near the next price level up here, the next resistance level. Okay, so you put your stop loss and take profit marks pending entry price, and then you place it, and it would be waiting in case it hits that mark, it would open for you. If you want also to program below the support in case it breaks down, that's a sell stop. Whoops, still pending order, and sell stop. And so again, your at price would be if it breaks below the support, maybe somewhere down here, 92.40, something like that could be your sell stop price. And then again, your stop loss would be back above the support. If it reversed and went back up, that could be your stop loss, and your take profit might be somewhere down near the next support level. Okay, risking in this setup much less to your stop loss than your potential profit in both of these moves. Okay, if you're using stop loss, no need to hedge, Ebert. No need to hedge. If you feel strongly about one direction over another, then once the position opens live, then you could go back and hedge the other direction. Okay, but you can't. It's not doable to set up the hedge without having the other trade open first. A market move or the first pending order kicks in, then you can go back and put the other pending order in. Why is that? Well, you know, if this buy stop opens up here, then I can place a pending order back down here as a sell stop to hedge with. But if I do the sell stop now, it'll hit the sell stop before it hits the buy stop, or the sell limit here. It would hit the sell limit before it would hit the buy stop. So you can't do a pending hedge for a pending position that's actually higher than the hedge. You have to wait. First position has to be open, then you can go back and set up the pending hedge. Okay. So starting out, maybe put the stop loss. Once let's say it broke up and opened here, the buy stop, then you could go back and say, okay, I can remove my stop loss and put my hedge position as a sell stop down here once the other one's open. Okay, so starting out, protect yourself in one way, then you can go back and adjust the protection, getting rid of the stop loss maybe, and putting a hedge once the other one's open. All right, good points, because some people don't understand. It's hard to set up the hedge on a current pending order. It's easier to set it up once one position's open. Okay, so couple opportunities here. Let's look at maybe Ripple, and it looks the same, doesn't it? Ripple looks very similar. We've got what looks to be, and really it looks a little bit different, doesn't it? This is more of a flat support level. It's not tightening. It wasn't narrowing like the other. And this is a flat resistance level up here. Okay, support. You see, here's the breakthrough back here. Support, support, and resistance, resistance, resistance. Okay, so again, this actually looks like a range that you could trade up and down from the support and resistance. So you could trade down with a sell limit from up here from the resistance. You could trade up with a buy limit pending order from near the support. And you also could set up, if it breaks through, a buy stop up here, and if it breaks through on the bottom, a sell stop down here. So you could put 4 pending orders right now. 4 pending orders, not trying to pretend that you know which way it'll go. Just if it gets near the resistance, what happened the last 3 or 4 times? It hit this price and dropped. It hit this price and dropped. It hit this price and dropped. It hit this price here and dropped. 1, 2, 3, 4 times. 4 out of 4. It hit this price level and dropped. So a sell limit from somewhere just before that price, if it occurs again, you could have a nice profit. If it breaks through, you hit your stop loss and then you activate the buy stop. So you could have a sell limit prepared as a pending and at the same time prepare your buy stop. At the same spot the buy stop goes in is where your stop loss is on your sell limit. So if the sell limit activates and then it breaks through, you hit the stop loss on the sell limit and activate the buy stop. If it activates the sell limit up here and drops, then your buy stop never opened and you're profiting on the sell limit. Same in reverse. If it comes down here, activates your buy limit, it buys and you're profiting. If it breaks through, you hit your stop loss and activate the sell stop and you're profiting if it continues. So you can set up all 4 pending orders at once. This really looks better for ranging. The Bitcoin was really narrowing, getting tight. This one has a clear range, up and down, okay? For now anyways, right? And that's all we can do is go on what we see technical analysis-wise, look at the patterns on the chart, and look for the most opportunistic entry point. So far, this is pure technical analysis. Bitcoin, USD, pairing looks like it's ripe for a breakout one way or another. The market consolidated and it's tightening, and it's got to break one way or the other. This one, Ripple, paired with USD looks more like a ranging pattern that you could do a 1-2 setup here and a 1-2 setup down here. Both possibilities at the bottom and the top of this range. Okay. Let's take a look at some fundamentals and then we'll come back and look at this again. Okay. Because right now the technical analysis looks pretty clear. Now, can we narrow down that maybe we'd prefer one direction over another and not put 4 pending orders? Maybe we only put 2 or 1. Maybe you do a market move based on the fundamental news. So let's take a look at the fundamental news and see what's going on. Okay, risk rally hits pause button as markets await trade signals. Okay, so people thought the risk was dropping yesterday on the markets because there was good news about U.S.-China trade negotiations. It was leaking out over the weekend and then through the day yesterday, and also, through the day Monday and also yesterday. Now, China pushed back a little bit yesterday saying, you know what, we want some of the already existing tariffs rolled back for this deal, for phase 1 of the deal, as they're calling it. They've broken it down to maybe 3 phases they're trying to do, U.S. and China. So that kind of put a pause on things, I think. And we talked about that yesterday, that seemed interesting. So risk rally hits pause. What they mean by risk rally, they mean the rally out of gold and the safe havens and into the stock market, which was hitting new highs. Okay. Now, so that's interesting to think maybe there might be some move back into the safe haven based on this information. And what did we say is mirroring gold a little bit as a potential safe haven? Cryptocurrency. Rollback means if China's saying they want a rollback of some of the tariffs, that means the U.S. already imposed tariffs on China, and China's saying we don't just want phase 1 to be that you won't increase tariffs more. China's saying we also, beyond not increasing tariffs more for this phase 1 deal, we also want you to lower the tariffs back down on the ones you already increased. Okay, so that's what rolling back the tariffs and that idea means, Ebert. And it could have been said a different way in the headline. That's the way it was written, so that's how I said it. But they just mean take back some of the tariffs that you already put on some of the products. China's pushing that they want some of them removed. So that kind of put a little pause on saying, hey, we've got a deal already. So that, and we'll take a look at gold, and we did. It came plummeting down, and we see it bounce back up some to a resistance level. So there's some upward pressure on the safe havens again, because maybe this deal's not quite in place between U.S. and China. Okay, specifically about Bitcoin and the cryptocurrencies. Bitcoin rising steadily, altcoins gaining bullish momentum. Does that sound like the headwinds are blowing up, blowing cryptos up or down? Maybe, Alex, that could be. Maybe it breaks back above the 1500 mark and up towards 1515 or 1525. if that's how you feel, Alex, you can set things up that way. And you also, we'll take a look, you can wait for confirmation too, meaning it's at a resistance level. You can wait for the breakthrough and then get in as a buy stop. And if it doesn't break the resistance and pulls back down, well, then you're not losing anything because you didn't buy yet, if you're thinking about buying. Okay, so anyways, what do you think this type of headline that just came out today does for the price of cryptocurrency? Does that sound like it all cryptocurrencies rise or go down? Bitcoin rising steadily, altcoins gaining bullish momentum. Sounds maybe good for Bitcoin and cryptocurrencies, positive momentum. If we go and take a look, Hong Kong makes major crypto move. What are they saying? Look at this. Starting today, cryptocurrency exchanges can apply to be regulated by Hong Kong Security and Futures Commission. They're legitimizing cryptocurrencies. It's becoming more and more common for different areas around the world to start thinking this way. What does that do for the momentum of cryptocurrencies? If you see, wow, a major market for cryptocurrencies is actually legitimizing and regulating it now on their exchanges. What does that do for momentum for cryptos? Bitcoin, Ethereum, Ripple, probably positive momentum with that type of headline and announcement. Okay? And then this is just confirmation of the same idea. The risk rally has paused. We're looking at gold had plummeted a bunch yesterday, and that kind of slowed down. Now, we can also look at the economic calendar, since most of these cryptos are paired against the USD, and see what's going on with the US today. Mixed news out of the European Union, some red announcements, which means bad news, some green ones, which means good news. Nothing on the USD yet. Nothing major to speak of. There's some low-level announcements today. One bullhead on this platform means low-level announcement. 3 bullheads would be high-level. Later today, there's crude oil inventories. Okay, so it's something maybe to keep an eye on, but nothing as of yet today in the USD. So mostly looks like positive headwinds for cryptos. It's the driving story today. So if then now we go back. If this goes up, if Ripple goes up and challenges this resistance level, do you prefer to keep this sell limit or get rid of it? Do you prefer to have both the sell limit and the buy stop set up here, or do you prefer to have one over the other? Yeah, probably get rid of the sell limit if you feel like there's more reasoning for Ripple to break through the resistance rather than continue that trend of bouncing down from it, right? So if you feel that way, and you don't have to feel that way, I'm not here to tell you how you should feel about it, but this is how you start to eliminate taking that shot that then hits your stop loss, okay? To maybe avoid that and wait for confirmation of what you're more certain of in your mind. So if I say, okay, I'm going to delete, I'm not going to do the sell limit because I feel there's positive momentum in the market for cryptos to go up more than down. And and I'm saying hypothetically, if that's how I felt, then I prepare my buy stop above this resistance level and I wait for it. And that's it. And then you get into the idea, some of you were asking about hedging. If you don't want to put a stop loss down here because you're afraid when it breaks through, it'll activate your buy stop, then it'll give a little jot down, hit your stop loss, and then it'll keep climbing, and you're afraid that will happen, then you can just put, after it breaks through and your buy stop opens, then you can put a sell stop down here as a hedge. Don't put a stop loss on your buy position, and you have the hedge down here in case it drops. You're breaking even with the hedge. You've got yourself covered without putting the stop loss, so that if it breaks down and then back up, you have a stop loss on the hedge, and your buy stop stays open. In that effect, and that's only if you're more certain about up rather than down in that example. If you're not that certain, then you just do your buy stop and maybe put your stop loss down here, and you hope when it breaks through, it goes running, right? But either one is an option there. So then what about down here? What about down here? if you're more certain about a buy than a sell, should we leave the buy limit? Should you set up a pending order buy limit as well? Not just a buy stop up here, but a buy limit? Yeah, exactly. Makes sense. If you think it'll go up, then if it happens to come down to the support level, then that means you trust the support level. You trust the support more than the resistance. So you're not selling down from the resistance, but buying up from the support makes sense if you think that cryptos should go up right now based on the fundamental news. So now I say, okay, I'm not going to take a chance that if this comes down, triggers my buy limit, and then comes down temporarily and hits my stop loss, then it goes up, I'm going to be mad, right? So I might set this up as a buy limit here, and in this case, you can set up your hedge position ahead of time, both as pending orders, because it'll get your first position first, the one you believe in more. Let's say it comes down, hits your buy limit, triggers it, then goes down, breaks the support. Now it can trigger your sell stop. You're covered if it keeps dropping. If it comes back up, have your stop loss on your sell stop here, and your buy limit is still open to continue profiting. Okay? So in this effect, you would set up 3 pending orders if you believe in the buy more than the sell. And again, I'm not here to tell you you should. You saw the news report. You saw the articles. If you believe that crypto should go up more than down right now, then these 3 pending orders would make sense. A buy stop up here with a stop loss on the bottom, or a pending order that you open up after this opens. You could come back and switch the stop loss to a pending hedge, or leave it as just a stop loss. This one, you can have the pending order in advance, because the first one that you believe in will open first. And if it triggers the buy limit and takes off running, your hedge position never opens. If it breaks, it opens the hedge to cover you. Okay? So those 3 pending orders you could set up in advance right now if you believe in that fundamental news and that's the direction you believe in. Alex, if you think the news isn't strong enough and you think it'll keep ranging, then you keep this sell limit. You keep the sell limit. Right? Then you have all 4 of them set up still. And if you really believe in the ranging, you don't need, if you really believe in the ranging up and down, you have the sell limit here, the buy limit here, and you just have a stop loss here and here, and you don't have to have the hedge position. If you think it'll keep ranging in your mind, if you're certain of it. Okay? So it's all about perspective, right? Alex, you might believe it'll keep ranging. Someone else might believe, nah, I think it'll break through. So that's a personal decision, how you interpret the news. But in any event, you set up the strategy with multiple entry points potentially. It's called a trade set. You don't just take one shot necessarily, and if you lose, oh, I lost. Think of it more like chess. You take one shot. No, exactly. It doesn't cost for pending orders. And if it makes sense that you're playing it more like chess, where you think 3 moves ahead, you put the pawn out there, and if it gets you to the queen, great. If it doesn't, you've got the next step ready when the market moves and hits your first pawn. Then you're ready for step 2. And each time putting yourself in a better position to buy when it's more oversold, or to sell when it's more overbought, catching that advantage each time you make that next move. And in the end, you can win with the trade set, even if your first thought was wrong. Because in this setup, for example, your stop losses or your hedge positions kick in with only a small amount of loss, with a much bigger potential for movement on the upside. And if you keep covering the losses, you can be in profit on the one overall trade set with the first position even still being negative. Okay? So very nice to set things up this way as you go along. So that we can go to Bitcoin then, and we can say the same thing. Okay? I find it hard to try and trade on the ranging here. I don't think it sets up nice for ranging. You might. You might say if it gets near this high point here or here, you sell. And if it gets near this low point down here or here, you buy. So you could set up a ranging concept. To me, the market's narrowed though on this more. So I'm waiting for a breakthrough. Which breakthrough do you think would have the chance to be triggered and then be a false signal, right? Do you think it's more likely that it would come down, trigger your sell stop, and then go back up and you lose on it? Or do you think it's more likely that it'll break through, trigger your buy stop, and then come back down and you lose on it? Which one do you believe in more? Which one do you believe in more here? I believe in the breakout up more. Why? Because of the fundamental news we looked at. Certainly I could be wrong. And you could believe that you think it'll drop more. So if you want to avoid a false signal and you think it's more likely to climb than to drop, then don't prepare the sell stop. Because maybe you think it's more likely that if it triggers the sell stop down here, that it could bounce back up from one of these other supports and go running up, right? So you start to choose, based on the technical analysis combined with the fundamental news, which pending order do I prefer to set up here? And maybe you say, I think the news is good for cryptos. I trust the breakthrough up will last if it happens more than the breakthrough down. So maybe you say, okay, I'll get rid of my sell stop pending order and I'll only put my buy stop. Okay? Now that's just an example. You could think the opposite. Or you could leave both of them, right? You have all three of those options. Based on the fundamental news, maybe in this example, you prefer the buy stop over the sell stop because you're afraid of a false activation and reversal more on the sell because of the good news on cryptos that we perceive. So then you only set up the buy stop maybe here. Alex, you're saying if there's a strong bounce of the support at 8,900, then worth a long trade. 8,900 would be the support level down a bit further. We'd have to go, let's go 1 hour candles, and let's draw the 8,900 price. Again, we need 4 hour candles. 8,900, we're looking right about here, okay? So, yeah, there's a more major support down here. I'll put a double line on it. Okay, right about this area where I put these two red lines, you see this is a more major breakthrough, support, 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 support. So if you feel to pull back down to this support first, then you want to buy, so you put a pending order way down there. So some of you might say, I don't want to buy unless it's on this support. Others might say, I think it'll climb now and you're going to miss your opportunity because it might not drop back down to that support, right? So it's different concepts. Now, can't you do both? Couldn't we do both? Couldn't you say, if it breaks through up, I'm in on a buy stop, right? Only if it confirms the uptrend by breaking through this slope, this side here, which we saw on the 15-minute candle. If it breaks through and triggers the buy stop above this resistance level, I'm in on a buy. If it continues dropping, then I have another buy limit down at this price waiting to buy. And so you're covered either way then, right? If you don't like getting in as a buy with the first idea of buy stop, then don't do it, right? If you prefer waiting to see if it comes down here first, then you only put the buy limit. And that's, again, a personal preference, but you could do both. You could set both of them up, and on the first buy stop, you could only put half the trade size you're willing to do. And if that goes wrong and it comes down here, then you could re-enter at the better price. That's an option as well. So it's not always you have to do one or the other. You can do both and still come out on top. And again, that goes back to the idea of a trade set rather than going all in on one move. Okay? Good points. And it's always good to look at the bigger perspective on the bigger candle to see where's the more major support level, where's the more major resistance level, what else is going on in the bigger picture. It's akin to, you know, if you're too close to the mountain range, you only see that one opening into the one valley to get into the mountain, If you back away further, you see, oh, there are multiple valleys. There are other entries at different locations. It's the same idea with trading. So sometimes you want an outside-in look. You back away, look at the 4-hour, the 1-day candles, then work your way into the 1 hour and the 15-minute and the 5-minute to find your more exact entry point. And you've got an idea of the fine points and also the bigger picture. Okay, any other questions or points? Okay, perfect. So we've got an idea of the fundamental news, that things aren't perfect with U.S. China yet. Safe havens might be pushing back up a bit. That the general fundamental news for cryptocurrencies looks pretty positive. And things have been uptrending of recent. If we take a look, well, what's happening with gold right now, the safe haven? And so if we take gold over here and we say, wow, gold dropped way down, but if we zoom in and look at 30-minute candles, gold's trying to make a little bit of a run up, right? So it shows a little bit of hesitation for gold to keep dropping. Doesn't mean it won't keep dropping, especially if US-China tweets something out saying, hey, deal reached. Boy, gold could drop a bunch more. If the opposite happens, gold could go rushing back up, right? If they have some kind of problems with the negotiations that's unexpected. So certainly either could happen. You can use the same strategy on gold, by the way. If it breaks above this high point, you could have a buy stop. The next resistance level is not till way up here, which is back up to that above 1500. That I think it was Alex, you were saying you think it'll go even higher than that. Maybe you wait for confirmation before you buy in on gold, right? And likely if gold starts running up, we might see Bitcoin start running up and Ethereum as well, and Ripple and some of these other cryptocurrencies. Okay, so I think we've looked at the general trend, and we could look at one more cryptocurrency. Here's Ripple that we looked at. Let's look at Ethereum. Ethereum, look at that. If you want a confirmation that there's been positive momentum in cryptos, nothing's been downtrending yet. Everything already just uptrended and is consolidating sideways or is continuing to uptrend. Each of the cryptos we've looked at, nothing has looked bearish. And so as we look at this uptrend, it's a nice little ranging pattern as an uptrend slope. Okay, so if you believe cryptos will go up, that's an opportunistic entry point right there. That's an opportunistic entry point. So if you have positive thoughts about cryptos right now and the momentum, you might think about a market move even there. That's a pretty nice entry point. Your stop loss could be just below these low points outside of this slope. Somewhere down here could be your stop loss. Okay, not much risk for quite a potential climb. All right. And you also, if you think cryptos will drop, no problem. I'm not trying to steer you in one direction. You could wait, and if it breaks below and out of this upward slope range, then you got your sell stop over here if that's what you think could happen. Okay. So lots of possibilities. I think easy to predict. You see this is bouncing right now upward off that slope, confirming, at least for the time being, a bounce up. And it kind of corresponds with gold that pushed up as well. So some things you can do here. Certainly, I'm not here to tell you what direction to trade, but the technical analysis looks nice. It really does on the chart there. I think this is a good place to stop. We've been going over 30 minutes, going on 40 minutes now. Any questions before we end things? All right, great. So thank you all for joining. Have a good rest of the week. You too as well. Thank you. And we'll be back at it next week, Monday, Tuesday, Wednesday with the webinars. Good luck with your trading. I hope to see you all profiting on cryptos if you choose to trade on them. Make sure you use the information to decide which way you want to trade, okay? All right, bye for now.